Good morning, my friends, and welcome to the Breakfast Club. It's an early morning start on Good Friday, heading for a little Bitcoin action this morning. And welcome to an earlier edition, early morning. I'm going to make sure we're on here live. Sorry, just watching my trade here while I haven't even seen if we're live yet. Yes, we are. Okay, we're good. We're live. All right. So we're doing a little Bitcoin trading this morning because the big markets are pretty flat on a Good Friday. So I'm only going to be here for an hour. And then I start my time off for a bit. So I was looking at Bitcoin here on a turn. It had been on quite a little tear up here. And I saw this break above this high, and I saw this inversion happen. So originally I got in off of here, and I gave it some slack. Usually my rule is if it trades a body above the level that you enter in on, you get out on that. And you see right there, body trades above it. Usually that's a reason to close it. But I was looking at this mean threshold of the breaker up here because it's a last up close candle before running it down and taking these lows out. So as it came back into that, I thought, well, I'll give it that slack because I had my stop loss sitting up here. And it was relatively close, and I thought, well, you know, I could take another hit there. I'm just looking at this here now. This is not what I want to see. To see where this closes now. We're literally sitting right on that, so it's got 29 seconds to close or take me out. So anyway, I gave it a little bit of slack. And it's going to take me out now. So now I'm looking for a run back up into here. So now we've got this body breaks above here. If we get back into this run here before hitting this, then looking at this inversion here now. So we have a turn below this low. We've got a body trade above it right here. Now you'd like to see it return back in here before running for that one range to the next range. Lobel Del Cash, what's up, homie? Spartanberry, good morning. So keep your eye on that area right there now. See how we couldn't get into these? Like right at the ideal spot, you couldn't get into them. Body finally trades below this one. You don't get a chance to get in that one. You don't get a chance to get in that one until it came back through here. So we're kind of hoping this one gets us back into his minimum here or maximum there and then breaks away. So we'll just watch and see what happens here. This trailing stop loss I had was that dynamic failsafe. So the failsafe was, if we do get above here, then we're looking to go higher. That's why my stop loss was there. If we get a body pop up above it and then trade back down, it could give me an opportunity to take out the last little bit of profit and close out the trade that I was doubling down on. So consequently, it was the failsafe worked. Let's right back into this one here. You see that? So I want to see this drop right down now through this level right here. When you've got one that's showing you an upside and one that's showing you downside, you're kind of stuck in between them. You have to take the overall bias and say, what are we doing? Are we overall biased long or short? Have we taken out recent highs? What's the likelihood that this is going to continue on the downside? So now we've blown right through there on a closed candle. So now you'd like to get back in on it. Wait for a breaker. So here's your breaker. Consolidation. So this would be a cam model 1 in here. Cam model 2 would be to here. Cam model 3 would be 50% of that leg. Takes out those highs. Oh man, did I ever catch a nice little live trade here. I was in live here. I had to endure this. I was going short here still, so I left it on with the curiosity that it might run through that. So if we start coming back into this range here again, yeah, you need to come back into that breaker or the bottom of the cam 1 model to go short. That was weird how I made that finally get a decent run back up into this. I noticed this before. When we start getting ones that run out, if it runs out the first time, keep this one in mind, the one that makes the highest high. Keep your focus on that one and not the one below it, the one above it. And if we do overshoot it a little bit here and just come into the rejection block, the next one tends to either come into the order block breaker, the low, or the open, I should say, or the low, and it starts to work its way down, and it tracks through this level of PD rays here. Not so much this one, but these ones. Keep that in mind, you guys, and just kind of tell me what you think about that after you've seen it a few times. See right here, body went right through it. Well, no, this one's right up to the bodies are respecting it here. Then you look at this level right here. Nothing in this one, just right back to this level right here. When you got that intermediate one, that kind of false one that's in the way. This one works great, but that second bump, anyway, that continuous return back into that area is always an area of interest for me. Terry Sullivan, how's it going, my friend? Didn't know we were on today. Just doing homework. Good morning, Harry. Yeah, I thought we'd do a 1 hour, Terry, today, just Bitcoin stuff. Just because it's the only one that's really moving. We need to get our fix before I go on my trip. We're still looking for a return way back up into here. So if we do get a punch back up, we're below this low now. So watch here. So we're looking for a little reversal pattern to happen right here now below this low. Back into a breaker here. Right off the top, the bodies are respecting that. So if we get a trade back through here, let's see what kind of response we get. In the meantime, look at how many people we've got, how many subscribers we got now. We're 2 away from 600. I look at that and think, I started the year off with 77. I went back through my charts. I thought it was like 100 and something, but it was actually 77 people I started off the year with in the community. And look, we're almost 600 people. We've gained almost 500, well, over 500 people, 528 people, 21 people right now. Just in 2 months. Or 3 months, I guess. March. That's incredible. So thank you for all of you people who have showed up. Right? Wow. I got out of my live trade back up here. I didn't do bad. Got from here to here. I had to endure all this in case it was just running back up until I was looking at this level here, but it's a full fill of that one there. That's okay. I've told you guys the same thing. If you make some money off of that, just be content with it. Be happy with it. It's a nice way to go into the weekend and vacation. So this is what you typically do. If you see a nice little run like this and you can get in on it, catch it at that inversion, that swing point. When it comes back into those swing points, you can get short on them. If you miss them, the one opportunity you get is to look for the breaker. So I'll go back through the charts here and show you as we go through it. So let's say you were looking for, you missed this run back up here and it ran through you. You look at this breaker, which is this last down close candle here before it runs up above this high, that high. Doesn't take that high out, but these are swing points. So you look for the one that takes out the most recent high. And if we trade below it or trade through it and you can get back into it, then you take that trade. So, for example, if we go down into the 15-second chart, you'll start to see this stuff a little clearer. Because we know this is fractal and we know this happens all the time. All the time. So if you miss the return back into, see that break-in structure here, we don't get a chance to get in it here, you don't get a chance to get in it here, then the body breaks below this breaker, you still don't get a chance to get in there. If we don't break the low, we don't break the low. This is all, you can't really see a lot in there. That's all both candles. If you did miss it, here's your opportunity right here. You blow through. Nope. No, literally, closes right on the breaker, opens above it, and then blasts right through it, and you don't get a chance to get back on it again. So we're still looking for a good example here. There you go. So we had to wait all the way down through this. You have to weather all this. Here's your next breaker. Watch us blow through this. So we go tapping on it, tap, 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 so you still don't touch it. Then all of a sudden it blasts through it. And you go, oh man, that's still going to the downside. So when that trades back up into it right here, watch, there's that breaker. You trade right into it, and then you get short right there. Also inside of fair value gap, just popped inside. Great place to get short. Your stop loss would go up with a fail safe just above here. So if the stop loss is here, fail safe is here. If it closes above, comes back to, then you close out of your trade. Ideally, if you could get back into that spot to go short, you'd take that, because that would be the ideal place. If it went above, came back down, tapped it to go higher, you'd be break even. Here you're less than 1%, or you have 1% from there to there, and you're a little bit of a drawdown, but you come back in the breaker. Ideal for me, I'd like to say, if the mean threshold of that breaker gets taken on the upside, it's the fail safe for me. So if I trade above it, come back to it, then I'm out, because we're probably going to run back higher into the range. So you can use that fail safe wherever you want to point it, depending on what your level of risk tolerance is. But that's what I mean by as soon as you break through a breaker, and you may have to wait a while to find one. In this case, when you find it, you can get in short there. Now, is it possible to see that on a 1 minute chart? Keep your eye on this area here now. We've now taken out that low. So the body's closing right on it. You have to wait now. If this body closes above and then you come back into this, then that's your long. And you're trading from one to the other. Or pull your fib tool, do your 50%, whatever method you want to use. So we'll go long here. And we'll pull our stop loss down to here. So here, as soon as you see that break-in structure to the upside like that, that's the algorithm saying, I'm going back. I'm going back to my... That's where you can see the reversal. And this is a beautiful reversal. And if you're saying to yourself, I miss this, you seriously are making some bad decisions. Stop beating yourself up. You didn't miss anything. It just didn't give you an opportunity to get in. You could say, well, yeah, stop right there. You could have got in right there. Yeah, could have, should have, would have. Stop judging what you would have done there. That's good. This is great. We have a nice, huge, bold candle like that, man. That's got to come back inside that. Get excited about that. Look at your range. 50% of that range. This could be just an optimum trade entry opportunity right here. Look at that, right on 50%. Lovely. Come on through. Come all the way back into our area. Then we can get short and do this all over again. Or we just coming back to our breaker, which would be at the top of this fair value gap. If you're looking at premium and discount arrays, if we didn't get an opportunity to get in on this one, and we didn't get an opportunity to get on this one, but then we get an opportunity to get on this one, chances are we're coming back to this one, premium discount. So the same rule sets up here. You start saying, well, I have relative equal lows here now. This is a beautiful little place to come running back to collect a pool of liquidity that's sitting down in here. What a great time for me to come all the way back up here, get on, and then start really blasting through these big open ranges. So don't get yourself too worked up. Just kind of get excited now. Say, this is great. I didn't get in on that one. That's great. That means this has got intent to get back up here. This had intent, didn't give you an option to get in. It had intent to get down to an area of liquidity. It just got below that low right there. Now it's going to come back off, offset its longs right here, or inside this range here, and then we're going to start hammering back down again. Or you may just be one of those people that go, forget that, man. I just want the optimum trade entry, 62% retracement, and I'll take that and I'll wait. I'll weather that, all that out. I'll wait for a 70% retracement, which pushes right in the breaker. That's an optimum trade entry. I'll take that. Put some low leverage on there. Well, you better prepare to put one. If you're doing that 1%, then it's got to go here. You'll have a lower leverage anyway, but the higher you go, the higher there's a risk of it not coming back. It may just turn around and come against you as soon as it hits this breaker here. So now we're hitting the bottom of the consolidation, cam 1. Happy Good Friday, Joey. Bitcoin trading time it is, my friend. You get some Easter eggs. You think it didn't take this higher one, so that makes it not a breaker? Is that what you're saying? But look at the swing point here. This is below. And you really got to pull this up because you got to understand what the true definition of a breaker is. A breaker is something that breaks a previous swing point. So it breaks this high. It breaks this high. This is the one that starts it all, right? We have the consolidation, then we have the impulse leg that leads from this. So we break the high. We break that high. We break that high, but we don't break that high, so that doesn't invalidate this as a breaker. You may go, yeah, well, it doesn't give it a lot of strength for me. If it just ran straight up and took out those ones, that's got some gusto, my friends. It's got some gusto. Mucho gusto. Then you go, then I appreciate a nice breaker. Like a man appreciates a nice breaker like this guy right here. Now that's a mucho gusto breaker, right? We got this one here because it now runs all the way down and takes out this low. It's a significant low, and it was just a hammer straight down. Take it out. Bueno, I like this one, right? This one here, it is beautiful. Ramo, it cleans everything out. That is a mucho gusto breaker. So, in your own mind, you may look at these and say, I like the level, and you can come up with your own level, like... It's a breaker, class 1 breaker, class 2 breaker, class 3. You could really get into your own definition of this thing, right? It's like a class. If you're going to rate those on a scale of 1 to 10, that would be a class, I'd say maybe a class 2, maybe class 3 breaker. Whereas this one is a class 5 breaker. It's a 5-star, my friends. This one, I would probably give it a 3-star. I don't know why I'm talking like a Mexican, but I think I have that morning voice on, so I feel like I want to say Fernando. I need my friend Fernando to turn up. I do like this one right here. Does that make sense, Joey? Or you could almost classify that as a certain class of breaker. If it does take one, to me, it's a breaker, yeah, but to me, I always call that kind of a weaker breaker. it's still a breaker. You know, you could say I like mitigation blocks are truly ones that do not take out a solid high. If this would have less strength if it didn't take out that high. Like if it just a little wick up above that, I go, yeah, I guess it could be. It's a super weak one, not something I would consider a super strong breaker, something with intent to break structure on the upside. Usually when we break market structures to the upside, that's a break. You try to break the backs, as Michael calls it. You try to break the backs of the other people. So that's why you rush back up and break market structure on those swing points. So there's your Cam 1 model right now. Look at that, body's right on top. So nice Cam 1. So if you're here, your stop loss is here. I would be moving right into break even in case this decides to pump up one more time. You want to see something hit this on your Cam model and start to really pull away. See how the body is broken here, body's broken here, and we don't get an opportunity to get in. We don't get an opportunity to get in. And we're finally working our way up into this one. Right? And we don't even get a chance to get in off of, well, I guess you could say right here. You came back to it right there. But who wants to get in and put your stop loss down here when you're that far up in your range? Just wait for your better setup. Just wait for a better setup. Christian's like, sorry, I gotta go. Just here to drop you a like for you. I will watch the stream later. Enjoy your trip. Have fun with your family. Enjoy Easter. Thanks, Christian. All the best, my friend. Say hi to Kitty for us. Wish you guys all the best, and I'll see you guys when I get back. Morning, honey. Look at you all tired. She looks so cute right now. Cup of tea? Joey, yeah, it makes sense. I see the swing highs it took before breaking down. Good morning, world traveler, and Derek. Now Derek's here. I'm going to kind of let you guys know, and whoever pops in and watches this later, Derek's going to be my my middleman. He's going to be my go-to guy when I'm gone. He'll announce something on Telegram there when he's going to do a stream. He's a busy man. He's working, and he's offered to, when he's got time, do a little show for you, whether it's just a quick, 10 to 11 silver bullet show. He'll be available for whatever day he decides to do it on. Go on Telegram there. You'll find him on there making an announcement if you want to catch him running through a silver bullet setup while I'm gone. And then when I come back, we'll get back to it again. I'm closing this one out until I see something more delicious here. Now we have this. You consider this a swing point, but again, we're just back to a Cam 1 model. Those Cam 1 people are just chomping at the bit right now, loving this. So if you're into break even, start trailing. You're looking at these things as the fail safes now, right? You want to see this hold, so your fail safe would be above this first SIBI. And if you don't know what a fail safe is, refer to our Sundays video, and I talk all about fail safes, when to apply them, how to apply them, and to where to apply them in all your different setups. Oh, one of my alarms going off here, 6:30. I guess you could call this one the breaker. It's the lowest body down close candle that ran up above this high here. If you're looking at and we literally came right up into it right here. I was trying to think, why didn't we make this breaker? Because we made this one. It's the lowest body candle in this little area here. And this lowest body candle initiates a run above the candle behind it, which is a definition of a swing point, how we break it to the upside. Small little range. Then we come back inside the breaker, find support at it, come back up, create an order block, find support at that mean threshold of that candle, and start pushing higher. I see it now. I was trying to find out, where is this lined up with? How come that did not hit that? Oh, yeah, okay. Right there. I guess by pure definition, it was right on the body. See that? Body to body. Hit it, and then quit it. So here, your stop loss, see how this is now fair value? Yeah, there's your fail safe. So you're watching, stop loss is sitting right here. Fail safe's right here. So you're watching. If this closes now above this, comes back to it, you close out, get out of your trade, because now we've got a further push back up. So this could be a further upside running to take these highs out here. So watch where this closes right now. Closed above it. It tapped down, now you get out. See that, how it closed above it? Now you may say, that's not enough for me. Well, then you're about to find out why. Your stop loss would have been taken there. And now you're eating up all your profits. Now if you did the other rule, which is that's why the failsafe is save your ass right now, because you're eating through all your profits. See? Right there. We knew it was turning. So I told you, you can get out right there. As soon as it pops up above it, you go, oh, I'm on the wrong side. Just that little piece right there, you go, I'm on the wrong side. It opens, gaps down, quick, get yourself, that's it. Your profits are over right there. If you didn't take profits at the fib tool, pull 50%. And then if it starts dropping below, slam your stop loss up to 50 or leave it at break even and then use that as your, so you've paid yourself a chunk here. When you get to here, that's your fail safe. And as soon as it closes, that stop loss you had that was sitting right here now just gets bumped right down to here. So you get the last little bit of profit and then it runs up and it would have taken you out anyway. These are magic. They tell you a lot about what the algorithm's up to, so just be careful when you're watching your fair value gaps to become inversions. Inversions are a senior array. In my eyes, I call them senior arrays. They become stronger the moment they get validated. Like we could talk about when a candle gets validated, the moment a body gets above it, so this down closed candle, the moment a wick or a body gets above it, it becomes valid. And the 3 PD arrays inside it become valid. There's more, but the main ones are, they become valid. The big bold up candles, the moment we get below them, the wicks, they become valid. And then the 3 arrays, main arrays inside those become valid. If you don't know what I'm talking about, go study ICT concepts. And you'll see. And study them from Michael. Don't go paying for them from anyone else. Go study them from him. It's better to get it from the horse's mouth. Look at that. If that's your next price leg, look at that perfect entry right there. For shits and giggles, I can't even resist the idea that that might be a beautiful place to put something in. So I'm going to put something there. That will be a mic drop moment if I get that one. And the stop loss will go right there. So another run for higher arrays, which we haven't hit yet on that one or that one. We didn't even get that one. We ran all the way through it. Now we're hitting the first one. So we have a run above an old high. We're getting a swing point. I'm just going to trade these for shits and giggles here. So we're going to take this guy right here. We're going to put one in there. We're going to trade it. I'm just going to do these one at a time. I don't need to be making some huge bucks here. Just want to show you guys what it is I'm after. We'll do all three levels. And you guys shouldn't be taking these trades. You should be just watching them. Because if I'm wrong, some of them are about to get hit. And this is just demo money. So and we have a zero spread. We are getting the price as it's being delivered. There is no spread in this. This is what's so awesome about this one. You go on MT4 right now, you've got a it's moving so quickly here. You've got a nine handle spread. This has got nothing. You lose 9 handles just in the spread, and it's really bigger than that. I swear those guys have a ghost spread. What you see is not what they end up taking you out even more. You're like, where the hell's that? Why did they take me out there? There's no way it moved there. They've got that ghost spread that opens up and down. That's why I hate MT4, MT5. Can't stand that thing anymore. So the shady brokers that sit in there and just steal, to make runs on your account. Not a big fan of them at all. Morning, Dave Barry. How are you? Did not even give me a chance to get in on that one. Where's the stop? Or the high on that one is 14479. 14470. And what was this? A high 14440. So yeah, I wouldn't have got it anyway. So then let's say we would have got that. Let's say we would have got that. We go like this. You pull your fib tool from bottom. This is an easiest way, unless you understand PD arrays really well and you like trading PD array to PD array, and you love the challenge of looking for premium and discount and where equilibrium is and all that kind of stuff. If you love that kind of stuff, then great, go for it. Right here, you're at 50%. You take a chunk off there and you move to break even. So your stop loss that was sitting up there, you'd be like, I'd slam it right in below this guy here because I wouldn't want to lose too much of this. So 50%. Another way you could do this when you're down here this low, if it trades back through 50%, close out your trade. Because it could just be running back up into this order block here again. And then if it does, or if it comes back into there, you reload your trade back on again. And this is what we call building the buffer. You build the buffer on a run that may take you out on the upside, like it may just suddenly take off on you and then clean you out and you think, oh, I took a loss there. This is a buffer. So this is kind of reinforcing if you're wrong up here, the stop loss gets taken, no major loss to your bottom line, just in a little bit in your profits. If you hit 62%, your stop loss slams right down to 50. And as you get to 70, it moves to 62, so on and so forth. And you're just going to slowly track it down till it bumps you out. It comes back and taps you. And then hopefully that's right in an optimum trade entry that you can say, yes, I've caught it all the way down into the optimum trade entry. So as it drives down, it's pulling its price down. And it's saying, I've got intent. There you go, slam. So you'll be right into 70% right now. You pull that stop loss right into there, then into there. And if it pops up there, you're out. at 75%. And then watch to see what happens from here off this breaker. Came right to the breaker, tapped it. Now if it runs all the way through it, it's already tapped you out at 75%. So be happy that you're, if that little thing would have taken us in, so we were like half a handle and it didn't take us in. Well, I don't get upset over it. These things are happening all the time, right? So had it taken us in, that's how we would have scaled it out. Or you just scale out a little piece at a time. If you're trailing the whole thing. So let's say you had 5 handles on that and you said, I don't want to scale out one here, one here, one here, which is a method of doing it, by the way. But you have to keep lining them all up in there. And then if they fail, like if it suddenly let's say you put all these stop losses or these buy limits down here to offset your sell limit. You put buy limits down here. So as you're at 5, you go 4, 3, 2, 1, and then you're out at the bottom of the rejection block. Let's say that's what you're up to. And it goes to 1, so you got 4 left, and then all of a sudden it slams back against you, takes your stop loss, and then drives all the way down. If you don't get rid of your buy limits, you're loading up on buy limits all the way down, and you want to try and close them out quickly. So a safer way to manage it is to, not that that's wrong, you just click all those out and unload them. Another way is just to take your stop loss and you kind of just, if you see it here, like this, you've got your stop loss up here, and as soon as that breaks down 50%, you start going, ooh, I'm just going to sit above 50%. Continues down, hit 62, so you're at 50, hit 70, hit 62, and you just keep pulling it like that. You still got 5 lots on, you still got 5 lots on, you still got 5 lots on, and then all of a sudden you saw it slam, what was it, 75, shot down, popped back up and took you out. So you're like, that's okay, I've got all that profit at maximum 5 versus 4, 3, 2, and 1. Right? You got full profit, so that's how you can kind of chase it down with full profits versus scaling yourself out. Again, it's your trading style, whatever works best for you. It's just another way you can manage your trade. And again, how you manage your trade is your business. Just trying to give you some ideas is all. Is all I was doing. That's all I was doing. Isn't Bitcoin so clean, Joey? Isn't this what we don't want to see in NASDAQ? This would be so delicious in NASDAQ if we could see this kind of action. But alas, let me bring you to the cheese grater. That is the NASDAQ. Look at that. Even on the daily, that is like cheese grater. Who wants to be in that? What a freaking mess. And then cue the elevator music. Da, 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 da. It's so clean. Oh my goodness, it's so lovely. It's so lovely. Mohammed, Cam 1 model triggered fail-safe $20. Cafe time. You took the Cam model there? Sweet. There was a Cam 2 there, and it probably would have taken you out. Yes, it would have taken you out. If you were going for Cam Model 1, you got paid ducats there. You really enjoyed yourself, and your fail-safe worked. So I'm all for Cam 1, people. Woohoo, you made money. You made the mythical demo dollar of something that you'll never be able to hold on to. How's that? Bitcoin, cryptocurrency, wild. So it ran back up. If you were going for a Cam Model 2 and it traded above you, let's say you pull your Cam Model 2 here. Let me get rid of all these now. Oops. How quickly my mind goes somewhere else. Dirt, dirt, dirt. Cam model 2, right there. If the body trades above it, you get out of your trade. It literally comes all the way up here, and your stop loss typically sits above the bottom or the top of your cam model, your consolidation. And it literally ran right up to your consolidation, tapped it, and then left. So that would have been one of those cam 2 model fails for sure. Unless you had it like 5 or 10 handles above, then you would have been safe and you would have come back in. Again, how you set your stuff up is your business. I'm just trying to give you the different cam models that I see. And the cam 3 model, the consolidation, the leg that takes out the consolidation, you take 50% of that leg, and that would have been your cam model 3. So Dave and I were kind of looking at this one yesterday. So you can either take it from the bottom to the top. That gives you 50%, which puts you right in a beautiful place there for a cam model 3. Or if you took the leg, I think when I did this, I took the leg, and the leg put you a little higher. So if you find it come up and it was a little short, maybe pull it from the bottom and just run it from here to the top. I tend to just do it with the leg that takes out the high, which is usually that one, and the 50% usually works quite nicely. What does this one line up with? So that may be the little wiggle room you want to build into your cam model 3 for ideal entry. Now, given when you're at 50% right there, you say, what's my wiggle room? Well, the rest of that, is it all of this? Is it the breaker? But by then, your stop loss is sitting up here. You're pretty much pooched. So I love the cleanness of this Bitcoin right now, but the problem is it's not giving us the entries. You see that? The body just rips up above it. The bodies rip all the way through them. You don't get a chance to get on them. See, the body just over here, body rips through it, comes back up, pops above it, here, rips through it, doesn't give you a chance to get back on it. Body finally trades above it, you don't get a chance to get on it, rips through it, you don't get a chance to get on it. Here, literally opens and rips through it, you don't get a chance to get on it. It doesn't even reach the high, it gaps up to the high and then takes off. So there's all these opportunities that we'd love to get in on. And don't let them change your rule. Don't let the fact that it didn't trade above you, like look at this one here. The body right there literally opens here, but you did not trade above it. So you open, you wick down, then all of a sudden it rips through it and it doesn't give you a chance to get back on. Look at that, how short you are away from that entry. Now, if you decide to do something different and you start to modify your thing here just because you want to form fit yourself to this back and forth action, that's entirely up to you. But I figure this will find out whether or not you're following your rules. If you don't follow your rules properly, that little bump above or little bump below, if you start giving yourself wiggle room like this, the bump above or below, you'll say, oh no, that's not reverse direction yet. Then it goes whip against you, takes your stop loss, and you go, damn it, that little tiny bump did work. You start to forgive your rules and start to play with your rules. Yes or no. And they got to be super tight, yes or no. Or you create wiggle room. It's entirely up to you, but document whether they fail or not, that new wiggle room you got, because that may be the new modification you're making to your trade. Now, what's this here? I guess this is a swing point here. I like to look at that as a breaker. Does it give you a level of support? Do we keep pushing higher? Still looking at this fella up here. So if we look from here, look at this. When I talk about PD arrays, you'll see me talk about this when we're in NASDAQ a lot. When I go from premium to discount. Okay, that's the new range. And you got these beautiful pockets of, hey, look, we're coming to fill some liquidity here. And you get a break in market structure to the upside right there. And if you can get in on that, like if this candle here would have just popped up into that and then came back down, and you would have got an opportunity to go long on that, you're at 50%. Let me just pull my fib tool here. 50%, 62%. You move up to 50. As soon as it goes up to 60, if it comes back down and taps 60 again, take your trade out. That's another method you can use inside there if you want to really hold that tight. Because you, especially when you see these big gaps in between, you don't, if this ran all the way up to here, like there's a big gap in there, you go, I don't want to lose that kind of profit. So I will allow it to pop just a little wick down there. If I see a body close below that, that becomes my fail safe. If I see a body close below that, come back into it, I'm out. If it rips all the way down to me, my stop loss is really here. You know, that fail safe can be used in so many different ways. So then you say, okay, so there was my 62%. Rolled over, hits my CAM 1 model. A logical level. Then all of a sudden it does this. It goes from here. And then it retraces inside that zone. Inside this. So we've got into a premium. From a discount to a premium. Inside a logical level, CAM 1 entry. And then we're going to retrace. So if you start to say, I'm keying off of this now and I want to see this retrace back into a logical level, 50% or more is moving to a discount array for me to gather up some more shorts to go long. So you're below 50% of the range, just dipped into the discount range, and then you start to run. You go, oh, good. I've not only have I come back into the 50% of the range, I start to look for this inversion to happen. And I go, that might be a great place as a reversal. It says, I'm reversing now. Here's my reversal pattern. Body breaks above it right there. You see that? Now, if it comes back in there, you get to go long. It doesn't. The body shows you. This is what we've been looking for all over here, all over these key areas, is just a little bit of nubbin coming over the top saying, I'm going north. And you go, great, can I get on the bus? No, it's an express train. It's one of those damn Brighton to London express trains that never stop. We did that in Brighton once, Terry. My wife and I were in Brighton and we were trying to head back to Hanley in London. We got on an express and they took us right back to London. Just skipped right over our place that we wanted to get out at. We're like, oh, we're going to be in trouble. And then the conductor's coming through with trying to show tickets. And he was at the other end of the train and he's working his way through the train. And right as we got into London, my wife confessed that we caught the wrong train. And he's like, well, you can get back on. And it was going to head back down. It'll stop there. So we went all the way to London just to turn around and go all the way back to Henley. It was kind of fun. Anyway, that's what did I digress. So you catch that was the express train to London from Brighton. Oh, my mind's off somewhere else. So that little nub in there, you come back into it, and then you finally left for the old highs. And you say, okay, great. So now what have we done? We've reached back up into another premium array. And then when we see this reversal above an old high, you go, oh, look, it's reversing again. It reversed and then came back. And did it give you the high? We were just short of that, were we not? What's the high on that candle? The high is, oh yeah, 44.79. The high on this candle here is 44.40, We were trying to get short there, and we still didn't get in. And then you pull the fib tool and you say, I've already hit 50% of that. If I come to 50% again, scale out your 50%. But then you're saying to yourself, you're either going to come back to this breaker, pay yourself at the breaker. If you hit 50%, pay yourself again. If it runs for a bit more, like 62%, hell, bring that stop loss right to 50 and start the rest of that. Pay yourself a portion off there. And if it trades back against you, which it does right here, a body does not get above that high, but then comes back up, but does not even give you an opportunity to get in. Leaves that little piece of fair value gap open for nobody. Once again, Brighton to London express train, and you still don't get a chance to get on, right? And then we have a rinse and repeat scenario. So we're back up into a premium again from a discount, back up to a premium. So it's like working these main PD arrays, right? We went up into a premium to come back to a discount, up into a premium to come back down into a discount, or up into a premium to come back. So we could look for a reversal here to go higher, and now we've got a body above this right here. But see, it doesn't take out a swing point. But just look at that as a class 1, class 2 inversion, fair value gap. We're talking about class structure of these things now. I wonder if Michael actually has a class structure on breakers. We're talking, Joey and I were kind of mentioning it this morning about a breaker. Is it possible to have a class structure? What do you guys think? Pop your comments in there. What do you think of class structure on breakers? Do you see breakers as being stronger? Are they always the same strength? Could you put a class structure on breakers? Could you put a class structure on fair value gaps, inversions? When are some fair value gaps stronger than others? That'd be an interesting question to ask Michael and say, hey, look, do you have a hierarchy on breaker structure, on those big senior candles? Do you have a hierarchy on these? Because to me, there seems to be a hierarchy in terms of strength of when these things are really strong. When they technically break that little swing point, but if it really takes that high, I like that one. That's a class 1. Class 2 is a lower class. It's not as strong, or it's a 5-star versus a 4-star. I don't care, whatever you want to. I'm just making conversation here while we're waiting for it to do something. So we have a break above a high. See that little swing point right there? Right there. Body finally breaks below something, comes back up inside it right there, and you can get short. Now get short to pull your fib tool, 50%. So there are stop losses up here. That's like an entry right there. See how the body's traded above it? Oh, sorry, right here. That's the one we're looking at. So stop losses here. You finally break down below it here. I'd move my stop to there. Make it even tighter now because we're in this consolidation. We've got this reversal happening here, even though it's not in a swing position. You're in a, what is it, retail calls that a bull flag or something, straight up, a little wiggle to the side, pendant pattern, whatever you want to call it. It's that compressing. You're inside the down close candle. It's not validated yet. This one's not validated yet. So you're really between this candle here and this candle here. Those two. You trade back up, you get to the mean threshold, you trade back down into the, I guess this is the lowest body candle right here. So you come back down into the body, and then you're back up into the body. There's the body. You're about to touch the body there. Come on. Give it a little nudge. It's a premium array, man. You gotta touch it. Like, I don't want to touch it. It's dirty. There you go. So order block validated now. Come back up. Find some support at it. Start digging into your other arrays, your rejection blocks. The mean threshold's been hit already, so you want to see that. Either tap it, come back through it like that, and then come back through it, or it want to start pushing up higher. So if it's just tapping off of here for a while, it's going to come back to lower PD arrays, discount arrays. So this here, if you want to find it as a level of support. So when you watch it now, you're kind of watching to see if this starts to climb up. Like there's those little insidious days where you just see the candles not making any slow progress, but it's like a little kid sneaking up behind you playing that red light, green light game, and they sneak up behind you. Every time you look back to try and get yourself a run, it's been crawling up insidiously higher all day long. It's just running off of these little order blocks, and it just keeps finding steps. So that's the kind of thing you're looking for. Are we going to start stepping now? Or are we just running from one array to the next and just banging around inside a range, right? So look for your range consolidations. Start trading your consolidation. If it's a consolidation that's worthy of your money, you put your stop loss right up nice and high, and you get your entry in as close to the high as you can to run back into the range. And as soon as it breaks through 50%, or as soon as it breaks through a discount array, slam that sucker into break even or move yourself into profit right away. Consolidations are hard to trade, and you really got to be proficient in trading them. Lots of practice. Joey, so happy you switched over to TradingView. Sorry I didn't help you figure it out. All those tools, like I said I would. Oh, Joey. Now I remember who Joey is. That's been a while since I've seen you, Joey. I remember you got funded and the way you went. I was like, oh, good for him. He's expanded. He's grown. Good for you, Joey. Yeah, Joey was like one of our first guys. There was like me and... Man, you must have been like the top 10 people, Joey, back in the beginning. I think it's because I remember you as Joseph. Yeah. Okay, Joey, now I remember you. Dewan, hi Darren, thanks for the stream. Question: does session highs and lows liquidity apply to Bitcoin? Everything that I showed you, that you come into on the daily shows, everything I show you is the same on Bitcoin. So far, I've seen everything. It's just clean. It just seems so clean right now. It's just such a fun thing to play in. And I don't advocate for Bitcoin. I just advocate for clean charts. And this right now is because Bitcoin is so much volatile. It's up and down. I love it. But because of this up and down motion, you get yourself great opportunities to get in on these awesome models, just to practice your CAM model entries, to practice your reversal model entries off the breaker. So if you miss, like we talked about, if you miss the opportunity to get in on this rundown, if you can come back into a breaker and catch a breaker like this guy here, if you can catch that breaker, man, you're catching some a return to the breaker. Usually you'll see this. Usually a drop down below, and it will pop back in and give you an opportunity to get that breaker, and then start continuing to hammer down, pull your fib tool and look for 50%, scale it out that way. For somebody who doesn't practice your PD arrays, and your PD array matrix and understand your PD array matrix really well, a safe way to do it is to pull to the next swing point below you. So if this is your run, let's say you caught your next swing down. Okay, so if you caught this guy right here and you're looking for 62%, 70%, just keep pulling your fib or your stop loss, trailing it down until it finally comes back and bumps you out. Then pull that one. If you still got a piece left on there at the end of this and it runs through your breaker on the downside, if it closes through the mean threshold of that breaker on the downside and you've got some left over, you pull it to the next one and then start your same thing again. From here you go 62%, or you go to 70, 75, and just start working it all the way down to the bottom. And if it takes out the mean threshold of that one, if you still have some left over, you know, go for your rejection block. And if it hits the low and you've come back all the way into the range, that's your downside objective overall, then sweet, you made it, you hit it, celebrate, wait for the next reversal to happen and catch that on the run back up. You saw me yesterday, or if you saw in the charts yesterday, I was trading both sides. I was going up and down inside a small little consolidation, just trading from one rejection to the next, one PD array to the next. So this little guy here, if you're in, your catch, that's the first one I've seen that we can actually get in on. You got to open it up to see it right there. And now you may go, that's not, I like them bigger than that. Okay, whatever. You wanted your opportunity. It's right there. If you don't like the fact that it traded above this, again, that whole area right in there is up to you guys how you're going to trade your fail-safe. Your fail-safe will be your determining factor. If that little gap right there, if that body trades above, and your rule is as soon as it trades above, I'm out. So that one traded above, you hope that the next one that trades back down will get you out at break even. So that it actually gaps up here and you go, oh no, then it runs up a bit higher. You may go, well, you know what, if that mean threshold is my line in my sand, if it breaks the mean threshold, I'm out. It literally pops through it and you go, okay, I'm out. You really maximized your drawdown before it finally came back in and took you out. You may just go, no, that's going to be my spot. Again, that right there is your failsafe, your rules, not Darren's. You figure out how you want to build your failsafe right there. Your decision is literally based on the next candle after that point. Sorry, this point right here. Oh yeah, yesterday I was kind of showing you the buffer, how to build the buffer. That buffer thing, I tell you, when you get into these consolidations off of this, and you're running to a discount array, and you take your money out, especially when you layer it in, I want to kind of give you guys an advanced way to build this buffer. Like, make yourself some money real quick. And I've showed it to you a few times, but I started playing with it yesterday, and it was funny. It was just like, take that first, remember if we take 3 entries. So let me just draw these out here. Let's say we have 3 entries like this. And don't worry, Joey, that you didn't help me out with this. I had to figure it out on my own, so that's good. You're busy. Joey's an engineer, ex-military with the Navy. He got me started on some of these ideas for these templates and stuff. I love his templates. So he's the one that got me motivated on this. So thank you for that, Joey. So let's say here's your 3 entries, right? One there, and one there. Let's say this is, just ignore all this right now. This was the entry 1, 2, and 3. The first one that you get, if it comes right up and taps it, you take it, and if it runs back to a discount array, you take it all off there. Or you start scaling it out if you've got more than just one on there. Let's say you've got 1 on there, take it out, put the trade back on, and it comes back up, locks you in, comes back down here, scale it out, take it all out again, then go back and put the trade on again. And then also it runs back up through two of you, runs back down, clear them both out. If it runs back up into the third one, all three of them again, takes all three of them, runs it back down, clear them all out. Then it comes back, it runs, and then runs through all of it. All those buffers that you've made on the way down before it finally breaks to the upside and you see this reversal pattern happen, you just go, I made money in a consolidation off of this key level. Pay myself, comes back, pay myself, comes back, pay myself, comes a little higher, pays myself, pays myself. And that we've seen so many times. A great way for this guy right here, the lowest level leverage of your 3 for 1%. So if you put 1% up here, this is your lowest leverage, medium leverage, highest leverage is closest to your stop loss. And it's the one that you will, if it breaks and comes back to it, it breaks even. So it's the one with the greatest leverage and the lowest risk relative to the stop loss. This one, lowest or highest risk, but lowest profits. But they pay you right away. Pay. It just keeps coming back, locking on. So that's just another whole new different way you can trade this cluster of 3. If you decide to go that route, you may just say, nope, I just want this one only. I want maximum leverage, lowest risk, best fail-safe option if my stop loss is wrong. And you may just come up and tap that and take off and never get your option to get in is much less than everybody else's. But this is for maximum wealth building right here. All 3, boom, boom, boom. Big risks, bigger risks, way greater rewards, and you can use this guy as the soldier that goes out and just keeps picking off things that you need. Coming back, load it up again. Comes back here, load it up again. Come back, and it's like starting your trade over and over and over again. You're just waiting for price to come back to you and dig in, but every time it does, you pay yourself. Don't just go, oh, this one's good, and then it comes back, then the second one comes back, and you go, now they've got 2 on, oh, it comes back up the third one, and then it finally takes off for you. Well, you've missed all those opportunities with the first guy, the first piece, to go out and do the damage, make yourself some money, while the rest of them are sitting here waiting to catch the ride. Hopefully that makes sense. You'll see me do that. I'm going to start doing that more often in front of you guys so you can see that model. Because I was doing it yesterday. I was just loving it. It was working great. I suppose I can just go like this and say remove drawings. So here's your example. See how we've got our swing point above a high. We've got this one that ran. If you said, yeah, I don't like that one, I like this one. Okay. Body trades below it right here. You pop back up inside it. Here's a great example. So here's your first one. Can I go back? Can I reverse that? Oh, I can't. Good. First one. Here's an example of that very thing I just mentioned to you. Watch. %. You load on right there. You just got your first one. Pay yourself at 50%. Come back here, load on again. If it makes it to 62%, sweet. Pay yourself. If it goes to 50, you go, great, now move to break even. Stop loss comes right there to break even. It goes to 62%, which it just taps right there. Quick slam it to break even, and then take your 60, pay yourself at 62. Or get out completely. Comes back to you. You load on again. And then the second one, it loads on. So you got 2 of you loaded on. Hits 50%, pay yourself. Hits 62%, pay yourself again. And if it comes back up here again, like right there, watch this right now. So you've paid yourself once here. You've paid yourself twice, 3 times there because this guy, both of those guys got in now. You load them back up again. It's like starting your trade all over again with your stop loss sitting up here. It's like waiting right now saying, oh, we still haven't really got back into a discount. Yes, you have. You've hit 50. You've hit 62% of that range. So if this comes back one more time, you would have paid yourself 3 times while other people are still waiting on that first trade to finally get down to their stop losses here because they missed opportunities to get themselves out. This is a classic about what I've just explained right here, buffer. And when it comes back one more time, right there, bang. Now, that is 3 times you would have paid yourself at the point where that candle is just starting that whole run back up in here. And we have not violated the reversal. Oh, sorry, no? Yeah, I guess you could look at that one as the reversal right there. Body comes back inside it, pops below. That would have failed. I was just looking at this one here. You'd still be in 3 trades there. I missed that one. So in a way, it's kind of good that, that I missed that. You have to ask yourself, you've taken out highs. There's a higher likelihood that you're going to come back down into a discount. So you have to look at your bias there, I guess. But here's 3 examples of that. Now that's paying you again for the 4th time now. So you've got 1 to here, 2, 3 to there, 4. Now you're underwater. So look for 5 up to here. All 3 of you are getting loaded on now. Right there. I think it's just a little bit higher. That would be your 3rd one. Right there. So now watch this. Watch this. Let's say this fails right now. Let's pretend it fails. Let's hope it fails. Make my point. There's your last entry. Here's your fail-safe now. What are you guys going to do to your fail-safe? Are you going to give it wiggle room? Are you going to give it to the breaker? What are you going to do? You're going to say, oh, I'm going to give it to the mean threshold of the breaker. My stop loss is sitting right here. Technically, it's up there because that's where you have to put your stop loss. But you may go, no, right there. Look at those equal highs. Do I want to give that wiggle room? So now you're starting to really screw with your rule of if it breaks this high here, we're going higher. It's already broken that to go higher. It's broken it again right here to go higher. That's why you trade from one to the other. Now, it's closed above. Closed above. You may go, as soon as it closes above like that, slam your stop loss to here, opens, and then rips right through you. Would have taken you out anyway. So that rule right there. So now let's say all 3 of those closed out because you had your stop loss. So that one trade you've been waiting on all this time to get all your trades in, even that guy here who you waited to the last minute to try and minimize your losses, he got his stop loss taken right there instead of there or up here where originally you'd put it. And all these lost their stop loss was up here versus up there. You didn't, they almost got a full stop taken on them, but you've already paid yourself once, paid yourself twice, 3 times here. Buffer. This is that buffer I was telling you about for this very scenario. If it rips through you and takes everything out, the losses are far less because you built a buffer with that first level entry. You see what I mean? That first guy is the first little soldier that will go out and gather up some fruit for you and will be your buffer if this fails. Like this. This is a great example of that very thing failing and how that buffer works. It's such a great little system. So it's like saying, I don't want to lose any principal. Go out and get me some fruit first. In case I get into a starvation, I want to gather up some food. Because if I take my hit, I don't want to take a big hit on my stop loss. I'm going to minimize that stop loss by using the first guy to send my little soldier out to get me as much as I can. Give me some padding before. So I'm really padding that area there. And if it does work out, you pad, you come back up, load on, and then rips through. Then you're like, you got all 3 of them. And that first guy gathered you a whole bunch of extras, and you really got fruit. And believe me, there's many times it'll do this, ding, 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 back and forth. Keep collecting it, keep putting them on there, keep putting them on there. It keeps collecting you at discount or raise, and then finally rips through and takes stuff out. Holy smokes, it's 7:30 in the morning. People, I've enjoyed that. Man, that time's been ripping through. I was supposed to be only going until 7 o'clock. I got to leave in half an hour, and I'm still in my pajamas. I'll quickly get to these, and then I'm going to be out in the next 10 minutes. I can have a quick shower. Wow, Bitcoin's so clean. Cam, Joey, so happy you switched over to trading views. Sorry you didn't help you out much with that. Hi, Darren. Thanks for the stream questions. Does the sessions? Yes. Good morning, Darren. Morning, Lambo. I've had it to adapt to a 4 to 10 points on NQ in this choppy market. Not following your rule is chasing price. My lesson learned. Yes, yes, yes. You've got to wait for the perfect entry. And there's so many times this algorithm is going to say to you, hey, can I entice you to break your rules? I'm just going to give you this little wafer of doubt. That's the old devil thing, right? The devil takes a guy comes down into hell, and the devil says, let me show you my greatest creations. And then in one, he showed him this one room, he showed him all these weapons, and he's like, with these, I gave man the idea of weapons, and they've killed so many people. And another room, he takes them and shows them greed. And he says there's so many people have died for the sake of greed. Another one is all lust. And how many families have been destroyed with lust. And then he takes him to another room, and he says, I want to show you my greatest creation of all times. And the guy's like, what's that? So he opens up the door, and on this pedestal is this little piece of wood. It's a wedge. And the guy's like, what? That is your greatest weapon? He goes, yes. He goes, what is it? He goes, it's the wedge of doubt. And with the wedge of doubt, if I can drive that into a man's heart, I can rule the world. I can dominate the world. I've destroyed so many lives with doubt. It literally wipes out all those other ones that have made me so many souls. So doubt. That's what the little algorithm's doing. You get that little bit of doubt into your trade, into your rules. One little iota, you start to stretch that, and you start to give yourself a little tolerance. You give yourself a risk. You know what works. Settle for what works. Not following your rule. I share with you my 1-to-1 RR Bitcoin trade. Yeah, we don't use RR ratios anymore, Joey. We've decided, we've evolved into this algorithm is never in a rigid 1-to-1 ratio. Never a rigid 1-to-1. That's why we have a fail-safe now. This would have been different. You wouldn't have seen this because it's just something recently I came up with. A fail-safe is adaptable. It's better than a regular trailing stop loss, and that gives you all the flexibility to go R1, 2, 3, whatever. Because you may go R1 and a quarter, 1 and a bit. Well, this thing will give you the flexibility to manage that. It seems to me that the time frame strengthens the impact of the structure. Day stronger, 4 hours stronger, 1 hour stronger, 15, etc. But I find what really strengthens the price point is the combo. Yes, breaker, 1 fair value gap, optor, combination is sweet. This, like this one here on Bitcoin, breaker, fair value gap, order block, high probability. I went on a 3-month vacation. Thanks for the answer. Shared on Skype is my failsafe. That thing is so accurate. Have a blessed day, Darren. I gotta run. You too, Joey. Before, I always looked for an example, 40 points for 70 points in NASDAQ. But if I can get 5 points consistently, you can make money easily. That's exactly it, man. Pay yourself. Oh, here's your opportunity coming up here. Oh, look, I'm getting denied. If we close, but we did. Look at that. We closed just below that point right there. I'm going to close it out because I got to go. We got to be out on the road to the airport by 8. So I got to go have a shower, get myself ready. My wife's running around here. Love you guys. I'm going to be heading out If you're new, subscribe if you want. We've got 2 more people left for the end of the month. It would be like 600. That'd be awesome. And I will see you guys on the 8th. All the best. Stay safe. Be careful in the markets. And take a break when you need it, folks. It's important. I'll see you guys in a week.